welcome everyone to the latest episode of TezTalks Live. Hope everyone is doing well today. So we have quite a bit to get into and some very special guests joining us. We're going to be chatting today with StakerDAO and talking about their platform and DeFi within Tezos. So today we have myself, William McKenzie of Tezos Commons, Ken Garafello of Crypto Live Leak, who will be helping moderate today's discussion. And lastly, we have Jonas Lamis of StakerDAO. Ken, Jonas, how's everything going today?
Doing so well, and thank you for the introduction there, William. I'm just very happy to be here. We have a very special guest lined up today with Jonas and StakerDAO, and I'm excited to hop right into it.
Guys, I'm really thrilled to be on the TezTalks here today. It's great to be on the other side of the microphone. Having done a bunch of podcasts last year, now I'm excited to talk about our projects that we're working on. So thanks for having me.
Awesome. Thanks, guys. So I guess we can go ahead and get into it. Jonas, before we start, would you like to kind of dive into your background, your involvement within the Tezos ecosystem, and get into StakerDAO a bit?
Sure. So my original interest in crypto started back in 2011, 2012. I was part of a startup in downtown San Francisco. Had nothing to do with crypto, but our office that we got in the funky place on 2nd Street, basically a new company moved in right next door, which was called Coinbase. And we were like, that sounds pretty cool. What are they all about? And so we did a little digging about Coinbase and learned that they were doing this stuff with this Bitcoin project, which I had never heard of before. And so I signed up for a Coinbase account and bought a few Bitcoin, and was off and running with that project. But startup life got in the way, and I pretty much totally forgot about it. And I ended up starting another company that was in the AI space, and kind of went deep down that rabbit hole for a number of years. And when I sold that company in late 2016, I looked up to see what did I miss over the last 4 years or so, and I missed the blossoming of the crypto space. I totally missed Ethereum, didn't know anything about it. And so I started reading white papers, seeing what was new, what was interesting, and I came across the Tezos white paper. And I saw that there were a couple of VCs, Tim Draper in particular, whose name was mentioned a lot in the Tezos sphere. And then I learned about Olaf Carlson-Wee and the fact that he had created this, spun out of Coinbase and created this VC firm called Polychain, which was also backing this Tezos project. And so I got pretty excited about it. Tracked down in the early spring of 2017, I tracked down the Tezos Slack channel, which was really the first channel that people were talking about Tezos on, and I think there was maybe 10 or 15 people on it. It became apparent to me that the merits of the Tezos project with the evolutionary, it's called revolutionary changes to bringing about a proof of stake consensus model, and all of the associated value propositions that Arthur had put in the white paper were going to potentially be really revolutionary beyond what Bitcoin and then Ethereum had brought to the market. And so I actually reached out to Arthur on that Slack channel. I told him, hey, I'm this marketer biz dev guy here in Silicon Valley. I want to market and biz dev Tezos. Sounds really awesome. He said, hey, it's free country, do what you want. And so I used that as a impetus to go off and launch a website called Tezos.community, which had kind of the first discussion forums in the Tezos space that I launched there. Started tweeting about it, the Tezos community Twitter handle. Started blogging about it. Started a YouTube channel to record some early videos about Tezos project. It's just really fun to go deep down that rabbit hole at the time. By the time the fundraiser happened that previous summer, a ton of money was raised, as everyone knows. I think I held the first or one of the very first Tezos meetups, which was in San Francisco in the fall of 2017. And then of course, we had the foundation troubles that emerged in the fall and winter of 2017. And that turned into some really interesting relationships that were built through the Tezos community. And the genesis of all that turned into the Tezos Foundation change, Ryan going on board there, which is really awesome. And then I kind of looked as we were heading towards launch, just trying to figure out what am I going to do to sustain myself in this ecosystem on an ongoing basis. So I partnered up with some of my engineering pals here in Silicon Valley, and we launched Tezos Baker, and that went live on kind of the first day it could go live when the Tezos beta net launched, which was the precursor to mainnet, but live tokens. And the Tezos, at the time it was called Tezos Community Baker, then pivoted to Tezos Capital Baker name. But it grew really fast because I think of the groundwork that I had laid down in the ecosystem around my blogging and my videos and stuff. A lot of people were aware of our brand, and we got a lot of interest in the Baker. It grew really big, really fast. But over time, we've had a lot of other great bakers grow in the ecosystem as well, and that resulted in me starting to think about other opportunities in proof of stake. And so I still run the Tezos Capital delegation service, and but we also launched a Cosmos validator during the Game of Stakes process, and then started looking at other chains as well to see what their needs were from a validator perspective. I came to the conclusion that I didn't want to grow a big validator business, have a bunch of different chains running. That wasn't all that interesting to me. But I did want to get involved in DeFi. And so when it became apparent that Ethereum DeFi was growing really quick, but Tezos didn't really have a DeFi position yet, and there was going to be some interesting opportunities to create DeFi in the proof of stake space, I jumped at the opportunity to launch StakerDAO, which got initial funding from Polychain last summer. And fast forward to today, we're actually launching our first economic product today. So that's kind of the background.
Gotcha. Thanks for that background there.
And can I ask a quick question?
Sure. Go ahead.
I saw that my internet connection was unstable. It appeared on my screen. Did you guys hear everything fine on that? Did I come through clear for you guys?
Yeah, I heard everything fine.
Okay, great.
Yep. But just going off what you said previously, you mentioned the Tezos white paper. I don't think a lot of people really realized that was actually written in 2014, you know, around when Ethereum was first initially conceived. So it's definitely interesting, at least in my opinion.
Yeah, definitely. I mean, the concepts that Arthur wrote about pseudonymously under, I think it was L.M. Goodman, I think was the name that he used, were obviously, you know, groundbreaking back then in 2014 when he wrote about them, and they're still pretty much groundbreaking in the crypto space today.
For sure. So I guess we can go ahead and move on here. Jonas, would you like to talk about StakerDAO and get into some of your team members?
Cool, love to. So StakerDAO is, so first of all, the concept of DAO, DAO is an acronym for Decentralized Autonomous Organization. And that sounds pretty cool. The original DAO concept was a part of the Ethereum lore. pretty early on in Ethereum's life cycle, a group of folks came together and created a smart contract where everyone could pool their funds together, and they could use a governance model of those funds in order to make investments. And there was, a significant amount of funds that were raised in Ethereum in this smart contract. I don't know the number. You guys might know. I think it was in the tens of millions of dollars worth of Ethereum was pooled together. And unfortunately, the DAO contract had some bugs in it. Some hackers were able to start draining the DAO contract, and a significant amount of the funds were stolen. And that led to a big schism in the Ethereum community, which was caused the fork between Ethereum and Ethereum Classic. So some really interesting lore about all that. But nevertheless, the concept of having a DAO didn't disappear, even though the original DAO did. And when you kind of have a concept that's as powerful as on-chain governance managing a community of people's assets, it's hard to put it away. And I would argue that the Tezos model itself is very much like a DAO as well. In the Tezos instance, we have a really successful governance model that's done on chain, as we've seen through the 3 or 4 protocol upgrades that have been approved, and those protocol upgrades manage significant funds, or could manage significant funds related to the community through inflation funding. So it's sort of like a DAO, sort of not, but I think that this notion of DAO started to take off in the context of building financial products in 2016, 2017. MakerDAO emerged in that time frame as a DAO model to govern the launch of a financial product, which is a stablecoin, the DAI product that we know that's around Ethereum, and a number of other Ethereum-based DAO projects started to emerge as well. And so I was sitting back looking at this in 2017 and 2018 and thinking it was kind of interesting, but really was going deep down the Tezos perspective, just trying to help our community get Tezos to a point of awareness and growth. And then by 2019, I really wanted to explore new kinds of offerings. And so looking at what MakerDAO had done, where they had a governance model with a token, the Maker token, and then they used that governance model to manage a financial asset, the DAI token. I thought that was a really interesting model. And I was talking to the guys at Polychain who had been a partner with me on Tezos Baker and on Cosmos Baker. And we started talking about how does that model apply to the proof of stake space. And through some iteration and discussion and creativity among a wide set of people in both the Tezos ecosystem, shout out to Luke Youngblood over at Coinbase, who contributed a lot of thoughts in this space as well. We kind of came up with this notion that, hey, there's probably an opportunity to build a DAO type model on Tezos that could govern many different financial assets over time. And since we know how well the Tezos governance process works, maybe we could borrow a number of the ways that Tezos governance works, apply it to a DAO model on Tezos, and then use that to launch products that the community of that DAO thinks are interesting, essentially. And so that was kind of our vision that got funded. And in the summer of 2019, I raised some seed capital from Polychain to go and build the first version of StakerDAO. that code base lives on Tezos. There's Staker token contract, which went live January 1st of this year. And we created a governance model that allows token holders to submit proposals and for token holders to elect a council and the council to vote on and approve the proposals. And in between all of that, we have an operations team that kind of is the central controlling entity today, and is a team that hopefully over time we will be able to decentralize and cede control of those things out to the community itself. So that was kind of our initial thought. I'm happy to go into the details of how the DAO works and why we built it on Tezos and all those kinds of things, but I'll stop there.
Thanks for that, Jonas. And actually, we have a question from the audience pertaining to how you raise capital from Polychain. So I think you went into that a little bit, but Susan J asked, can you share the story of how you raise capital from Polychain?
Yeah, it was really fun because I've been kind of a lifetime entrepreneurial type of person over the last 20 years. I've probably co-founded 4 or 5 different companies, and mostly in the enterprise software space, but now heading into the crypto space. But the match of my vision with what Olaf was looking for at the time we came together was the most magical match of ideas that I'd had so far in all of my pitches to venture capitalists. It was really interesting. I went to him and, you know, I had been sketching up these ideas of creating a token that would represent proof of stake tokens. One of the problems that I had seen being a large Tezos baker was that I was highly, you might not call it a problem, but I was highly, my success was highly correlated with the success of Tezos. If Tezos was at $2, that was okay. If Tezos was at 38 cents, that was terrible. If Tezos was at 350, it was great. But I was very, you know, I had to pay real money to run my operation and to pay my salary and my team. And if I didn't have Tezzies coming in, it was painful. And then I was talking to Lorian over at Figment Labs, who's a baker in the Tezos ecosystem, but they're a large baker in the Cosmos ecosystem. And we were having a conversation one day, and he had the same problem, but he was very contingent on Cosmos and the returns that he was getting as a validator there. And so we were talking, I was like, you know, we should figure out some way to swap our risk here. Like, I can get a piece of your Cosmos action, you can get a piece of my Tezos action. We could figure out a way to pull that together to reduce risk for different bakers in the ecosystem. This was a early conversation about how this idea came about. And then it occurred to me, well, maybe we could create a synthetic token that represented a return across those different chains and kind of blended the risk across what I would say are some of the top tier blockchains in the proof of stake space. And so when I went to Olaf with this idea, he said to me something along the lines of, you know, that he'd been thinking about this proof of stake synthetic space himself for several years and had invested in a couple of different models to try it out. But when I laid out this notion of having a DAO managing these tokens and having a burn model associated with the rewards, he instantly latched onto that as something that was really viable and really wanted to. And as he was thinking about kind of his experience in the different types of crypto purchasers that are out there, from, you know, the everyday trader to the DeFi expert to the long-term buy and hold institutional or family office, you know, he thought there was a story for all of those people with a token like this potentially. And so really it was a match from the get-go, and then it was really more about Polychain working through their process to make sure that I was the right person to invest in, and for us to come to terms with what would be a reasonable, seed investment, so that we could raise enough money to get to the point where we could launch the DAO on Tezos. At which point in time, my plan was to raise additional funds to kind of get the products out into the market, and that's what we did.
Interesting. Thanks for giving some insights into that question from Susan. So for this part, we're going to kind of get into the specifics behind your platform, specifically the Staker token and also the Blend token and any other future projects that you all have in the works. So Jonas, would you like to talk about the Staker token?
Sure, I'd love to. And I don't know if I have to say it or not, but I'm going to say that this is not financial advice, right? I'm going to talk about a couple of different tokens that StakerDAO produces, but everyone should do their own due diligence on this. And in particular, when we get to the Blend token is not for sale to U.S. persons. We're offering it under what's called a Reg S offering, which means we're selling it to people outside of the United States, and a number of jurisdictions are not allowed to purchase the Blend token, which is being done through a CoinList offering. We'll get to that in detail. So if you're a U.S. person, you're not going to be able to purchase the Blend token from the CoinList offering. But anyway, talking about the Staker token, the Staker governance process. What I really liked, with Tezos is that it was designed, I think, with governance first. It was designed with an idea to build a truly decentralized governance model, as much as feasible from the get-go. The fact that the Tezos Foundation holds essentially a veto share of governance is a challenge for that kind of governance model. Fortunately, the Tezos Foundation came out early with a non-positional stance of not wanting to influence stuff, and as long as that holds, you still have to trust that, which is off-chain, but in general, the Tezos governance model is by far the most decentralized one that I've seen that's out there. And so I think when you look at some of the other governance models that DAOs or other projects are running, you see very much less success. When we looked at MakerDAO, for example, even though they do have a DAO token, they have very low participation in decision making generally. 3, 4, 5% of the Maker token holders tend to vote on any given proposal that runs through their system. Compared to Tezos, we have 70 to 80% participation at the end of the day, it seems like. Other projects like Compound and UMA have recently issued DAO tokens, but I think they issued tokens in response to a regulatory challenge more so than it being their vision all along. I think a number of these DeFi projects on Ethereum came up with really clever ideas, and then they're like, okay, we're going to launch those clever ideas, but then they were thinking, oh, now we need to figure out how do we get our community involved in this in order to deal with the decentralized nature of what's going to be required in order for these things to run in a compliant way. And so when Olaf and I were talking about this a year ago, we talked about how you really want the community to be the decision makers, and you want to put the decision of what kinds of products you're going to launch, how they're going to launch, all that kind of all those kinds of decisions in the hands of the DAO. And so, but you also want to do it in a way that that is efficient and encourages high levels of participation on an ongoing basis. And so I kind of went back to what Tezos had in the market for its governance process, and I said, let's just let's just copy essentially as much as we can from Tezos for our DAO, but let's configure it in a way that makes sense for launching financial products. So for example, we have token holders, the Staker token holders who have purchased the Staker token through, through the seed round that we did, and then through the strategic fundraising round that we did at the beginning of this year. We only have about 30 token holders today, and these range from VCs and institutions to Tezos enthusiasts and validators. And those token holders get to participate in the ecosystem by helping format and formulate what our proposals are, and also by voting for a council that approves those proposals. And that election process for the council happens on an annual basis. And so the Staker token holders, one of the things that, one of the roadblocks we ran into right out of the gate here is, what do we do from a regulatory perspective around the Staker token? It would be awesome if we could just sell it to everybody and everyone could participate and you could be anonymous and be a part of the Staker ecosystem, but that's not where the kind of the law is today, unfortunately, especially living here in the United States. And many other countries have similar restraints as well. And so we kind of decided early on that if you're going to own a Staker token, it's going to be basically the same thing as owning a share in the company, a share in this DAO. Like, Staker tokens are tokenized equity. And if it's equity, then it has to be treated sort of like equity. And that means there's a set of compliance requirements that you have to put in place to sell equity to investors. And for us, what that meant was we had to treat the sale of Staker tokens very much like raising funds as a startup. No surprise there, but it meant that we have to make sure that our investors go through a KYC process. It meant we had to make sure that they were qualified investors. They were, they had certain qualifications in different jurisdictions so that they could, in fact, make these investments. We had kind of a minimum threshold of investment we wanted to take. And at the end of the day, we had the option to say yes or no as to who joined the funding round, essentially. And so now, like I said, we have about 30 different entities or people who are Staker token holders via the fact that they are equity holders in StakerDAO. I'll pause there and see if you have any questions about that, or we can go on from there.
Yeah, Jonas, I'll hop in here. So you say you have about 30 holders of the Staker token. Do you have the initial circulating supply? Do you plan to offer additional shares of Staker in future funding rounds? Is this something that co-aligns with maybe a corporate action on the actual equity side of the company itself?
Thanks, Ken. So if you look at the Staker token contract right now, which you can find on Better Call Dev or probably some other contract explorers out there as well, you'll see in the code that there is an initial supply of Staker tokens of 1.5 million tokens. And our plan essentially is to only have 1.5 million Staker tokens representing 1.5 million shares in the company in circulation. And any profits that ever accrue to StakerDAO will essentially accrue back to those tokens in some format or other. And so what we've been doing is we've been selling those tokens to these investors that we raised funds from here. The number of tokens left in the Staker treasury has been decreasing, right? However, there's still a significant number in the treasury, and we would like to sell more tokens to more people over time, right? The real question of how do those security tokens, if you will, ever become more liquid is really up in the air. It's unknown what the liquidity model for something that is a security trading on Tezos ultimately will be. You have, different exchanges that are materializing around the world that are offering different kinds of solutions for providing secondary liquidity to securities and security tokens. We don't know if any of those will ever work for ours, but we're interested in exploring, right? In the traditional venture capital space here, if a company issues shares to its employees, for example, or to its investors, pre-IPO company, there's a growing set of services that provide secondary liquidity for those shares. Shares Post, or I think they were acquired by somebody, but there are several exchange type models out there for private equity and venture capital based companies. I think more and more we're going to see those kinds of services emerge for security token backed enterprises as well. And so I wouldn't be surprised if a year from now or at some point in time, we start to see some of the names that have been bandied about here, like T0, for example. We hear about them building a security token exchange. Maybe Coinbase will do one someday. Maybe CoinList will do one someday. I don't know. But I wouldn't be surprised if some of these services start to provide security token marketplaces that are akin to a utility token exchange, but have some level of additional KYC and qualification put on the participants in that, so that they meet whatever the regulatory regime is for wherever those tokens are supposed to trade. So for us, I think we're going to probably get this blend token out into the market, watch it grow for a little while, and then we'll probably come back out with some kind of new offering of staker tokens, which will be much like our current offering, some kind of fundraiser that we'll do to community who wants to participate.
So just curious. So there was obviously some funds that were raised during these initial two phases of the staker token distribution. Where do those funds live? And are there any kind of reporting around how they're being spent, similar to what we see as the biannual report from Tezos Foundation?
That's a great question. The funds that have been raised so far, which total about $3 million so far, are sitting in a combination of cash and crypto that the staker operations team controls. The Staker Services Limited is our organization. It's a Cayman corporation, and I'm the CEO of that corporation, and I have an operations team that is doing the will of the council. And so you can kind of think of the council as the board of directors, sort of, and we're using those funds that we've raised to get our products to market. One of the things that we also hope to do is use those funds, with the blend token, we'll talk more about that, but our hope is that it generates some profits for the staker token holders over time. And when those funds are generated through the blend process, we want to use those to reward the staker token holders. And so our hope is to continue to use the cash that we've raised from the funding round to pay for our operational expenses for quite some time. And then eventually, as the assets that we have under management grow, there'll be enough funds flowing in, enough revenue flowing in from the management of those funds to be able to cover operational expenses, as well as providing, a return for the staker token holders. But that's still a number of years down the road, and we still have a lot of tokens in the staker treasury to sell to future investors to fund our operations to get us to that point, essentially. As far as transparency on the data, No, not yet. We have not done any kind of public accounting for the $3.2 million that we've raised so far. We do report it to our investors, but we don't necessarily report it to the public at large. And I think one of the things that could happen with StakerDAO is that a proposal could be put forward and approved by the council to make reporting transparent, for example, right? It would be up to the council, I think, at the end of the day, how much they want to share, and up to the community on how much they want to share outside of the community, right? But I don't think there's any veto control or anything like that necessarily. The other thing, and let me just reverse back here, because we talked about Staker tokens as a security over the long term. That vision, while correct from a compliance and regulatory perspective and a legal perspective, is not the vision that most of the other DeFi DAO companies have right now. So if you compare us to MakerDAO, for example, they have a profit token too. It's called Maker. It goes up in value through a buyback and burn model associated with interest that is generated from DAI Vault accounts. And that buyback and burn model causes the supply of Maker to shrink over time, which theoretically causes the value to go up, right? And they don't treat it like a security, right? They issued it like the utility, and it's tradable like the utility, and that's a real gray area for them, as far as I'm concerned. And if you look at Compound and their C token, you look at UMA and their, I don't remember what the name of their governance token is that they just launched on Uniswap the other day. Those folks are modeling themselves sort of after the Maker process. And so I think that there's going to be a bunch of regulatory fallout / alignment over the next couple of years in this space, where either that model will prove to be fine, or those models will not prove to be fine, and a model like we're bringing forward will prove to be the preferred one. And so, from my perspective, I think it's a lot easier for StakerDAO to go from being a security token and recognized as a security token, treated as a security token, to becoming a utility token than it will be the opposite way for those guys to have to morph into something that's a security. Who knows if and when that will ever happen, and whether or not the SEC or other entities ever really cares that much about it. I'm sure they care, but I'm sure it's also not at the very top of their list of things that they're caring about these days. So we'll see how it emerges over time. But it's possible in a couple of years that we find that we have sufficiently decentralized StakerDAO, and the governance process runs autonomously, and the decision making truly is in the hands of the folks who hold the tokens, and the work that they are doing is producing the returns that they're getting, and maybe the Staker token becomes a utility. That's entirely possible. It's just not something that we're pitching to anyone, nor do we think that it's likely going to happen. But the space is so uncertain nowadays that it's really interesting to think about.
Yeah, and I think, speaking for the Tezos community and, the Staker community must appreciate your risk-adverse approach to this. You're reducing risk as much as you can by taking this compliance-focused approach.
I mean, it's one approach, right? It's not for everybody. There's a strong, libertarian crypto ethos that from before day one, and I have nothing but respect for that group. I think we would never have been anywhere close to where we are now without the cypherpunk hacker ethos that has materialized over the last 30 years. And I love Bitcoin. I hold plenty of it myself. I think it's a great product. But it's just not. It's not it's not the only path that's out there these days in the crypto space. And so we're all trying to figure it out.
So quickly, before we move into some talk on the governance model, could you divulge, I know there's rather exciting news around the Blend token today. Can you divulge some of the tokenomics behind Blend? What are your targets for fundraising goals, and what is the circulating supply, initial supply going to look like for Blend?
Sure. Yeah, so the Blend token is having its initial offering process starting today, actually. And the acquisition of Blend tokens is being done with our partner CoinList. And today, folks who are non-US persons can head over to blendtoken.com and they can find out the details on that. And that can route them into the CoinList process. But the whole thesis here for the Blend token is to create an asset that represents a position in what we're considering the best proof of stake tokens, a long-term holding position in the best proof of stake tokens. And so if you the best proof of stake tokens through our model are a combination of Tezos and Cosmos and Algorand right now. That's kind of where our community has gotten to around the decision-making process for this. And so in the future, folks who hold a Blend token are essentially holding a position in a basket of those three tokens. And the way that all works is that all of the funds that are raised through this initial offering that's happening on CoinList, 100% of those funds actually go into a fully collateralized position in those three tokens. And that position is actually market weighted. So it's going to be about 60% Tezos and about 20% Cosmos and Algorand at launch. So if we raise $1 million in sales of the Blend token, or if we raise $100 million in sales of the Blend token, all of those funds go into an underlying collateralized position. And through the StakerDAO governance process, we've selected a set of validators that will receive the delegation rights for those tokens. And so essentially what's going to happen is the sale starts on CoinList. A number of Blend tokens are purchased at $1 per Blend. The sale is paused on CoinList. Those funds are then collateralized into the underlying proof of stake tokens. Validation decisions are made per the council and the community. And then we will be able to start reporting a NAV, net asset value of what our holdings are in response to every Blend token, right? And once the NAV reporting starts, then CoinList turns their sale back on, and they'll start essentially minting new Blend tokens to people who want to purchase them at the NAV, essentially, right? So kind of we got a period of time where it's just $1 per token, and say that raises $10 million. All $10 million of that gets put into these basket tokens, and then we start having a dynamic price associated with it, right? And one of the questions that everybody says is what happens to the rewards that get generated from the validators. And so what happens is those rewards flow into the wallets that we manage, and we're tracking how much rewards are generated on a monthly basis. And then once a month, we actually take all the rewards that were generated during that previous month and we sell them. And we sell them for USDC. And then we have a smart contract that will run, and it will allow everyone who has purchased the Blend tokens to the CoinList offering can sell back Blend tokens to us in return for that USDC. And essentially, it's like a reverse auction, if you will. We have $500,000 worth of USDC during the month of September. we open up a window for anyone who is a registered blend holder to place bids. I'll sell you 5,000 blend at $1.30, whatever, however they want to place those bids, they can. And then the auction window closes and the smart contract runs and clears those sales. And so we buy back the $500,000 worth of blend tokens from those holders at the prices that they laid down. And those prices may be the same or different than the NAV price, for example, right? It's kind of up to those token holders where they want to price things. And then when we acquire that $500,000 worth of blend, we then burn it. And so the overall blend supply after that auction process ran has shrunk by the blend that we acquired through the auction process, while the underlying assets, the Tezos, the Cosmos, the Algorand, remain the same, essentially. And so in that way, you're mimicking the yield, or let's not call it yield. You're mimicking the rewards distribution to all of the token holders, but you're doing it in a way that doesn't actually require them to receive new tokens, essentially. And so that's the ongoing process that will happen on a monthly basis. And over time, we expect that more and more folks will show up at CoinList to buy new blend at the NAV, which will allow the underlying assets to grow over time, and will cause this auction process to grow over time as well.
So for simplicity, relative sake, I guess you could compare the process of buying new blend tokens to like how a mutual fund operates on a NAV. Obviously, it's more complex to that. We have the staking rewards in the reverse auction that you talk of. But if I'm a layperson coming in from traditional finance world, I could look at this like a mutual fund product.
Yeah, and kind of the buyback and burn is more like a stock buyback, sort of. Apple is buying back its shares. It has excess cash on its balance sheet, and rather than distributing that cash as a dividend, it decides to buy back some of the shares and shrink the supply. Well, the revenue generating model underneath is still the same.
Very good. And I think, William, you're going to go into some of the governance questions now.
Yeah, so Kim went into some of the governance questions pertaining to Blend. So Jonas, would you like to get into kind of the governance model behind Staker?
Sure, I'd be glad to. Maybe I'll share a quick screen here. Is that okay if we do that?
Absolutely.
All right, cool. Let me actually pull up our governance portal here. Give me 1 second. Let's see if we go to governance.StakerDAO.com. You guys can follow along at home here. I'm going to screen share, and I'm going to share this window. Okay. Can you guys see my share?
Yes.
Okay, cool. So, surprise, our governance portal may look like something you've slightly seen before. And that is the Tezos Agora website. Basically, we love TezosAgora.org, a governance explorer that shows the process of the ongoing Tezos governance cycle. And we decided to steal it. So we took the open source code base and reorganized it in a way that matches our governance process. And so our governance process essentially has 4 steps: proposal process, evaluation process, voting process, and implementation process. And those 4 steps are managed on the Tezos blockchain. And in our case, that governance cycle runs on a monthly basis. And we attribute each of the four phases to a 1 week period. And so on the first of every month, the proposal process starts, and it runs for 7 days. And during the proposal process, this is where, as it stands today, the operations team members, operations team lead is Christian Arita. Christian spends a lot of time talking with our community members, Staker token holders on our forums and on our Telegram channel, and talking with the council, talking with the community at large, looking at where things are heading. And over time, he brings a series of proposal concepts to the community for their feedback and for their informal polling. Ultimately, that coalesces into potentially one proposal per month that is then documented it's documented on the forum site, and then it's documented as a PDF. If we go actually, let's see if I click on this Learn More button, I think we can see the content of the most recent proposal, but we can also see it here on Discourse. We go to the StakerDAO proposal section. You can read the proposal here. This proposal is then put on chain during that first phase every month during the proposal phase. And during that first week, that's essentially what happens. So the operations team lead packages up the proposal and puts it in the forum and creates a hash of the proposal. We use the smart contract that we've written with a multi-signature model to have two operations team members both sign keys identifying that proposal is the one that gets submitted during the first phase, and then it gets put on chain, and you can see all of that through the smart contract happening. And then this Agora page here pulls it out of the smart contract and displays it here. So it's all really cool and all linked together. And so the first week is the proposal process getting put on chain. The second week is ongoing discussion about the proposal process. That's the evaluation phase. This is where the council weighs in on their opinion of things. The community members weigh in on their opinion of things. The operations team, kind of three co-equal entities, if you will, right now, weigh in on their opinion. And any uncertainties are discussed about the proposal at that point in time. And then in the third week is when the voting process happens on that particular proposal. And the voting process, in our case, as I mentioned, we have a elected council. And the council is elected on an annual basis through an on-chain process on Tezos. And once that council is elected, the council has their own council voting keys. And so they all are running the Staker CLI on their computers, and they are voting on chain for the proposal if they approve it. And those votes are then calculated through our smart contract. And over the period of the third week, we collect votes, and at this point in time, we need more than 50% of the votes to pass the proposal. And so in this case, the most recent proposal, which happened in May, was passed by all 5 council members. And once the voting process is done, then it moves into the fourth phase, which is by and large an off-chain actions. This is where the operations team is actually doing the implementation work for any new products that were approved or changes to existing products. Some of those things could happen on-chain. Some of them happen off-chain. And clearly, one of the pushbacks that the world of decentralization will have here is that the operations team is very centralized. It has a lot of control. it holds the master keys to this process, and that is all true. And as we talked about in our previous discussion about decentralization, our goal is to try and continue to push this to decentralize more and more and more, to put the keys of how everything runs into the hands of the council, and to put the hands of the council, the decision making of who's on the council, into the hands of the token holders, and to try and take the operations team out of the governance process as much as possible. But that's going to be something that evolves, I think, over the next couple of years, based on how the community wants it to evolve. So I'll stop sharing this at the moment here, I think. And come back to picture. Okay. Any questions about that?
Yeah, Jonas, just going off that, you touched briefly on the Staker Council. I have a question myself personally. What was the rationale behind pursuing a 5-member model with this council?
Honestly, it was a pretty arbitrary number. If you're asking why is it 5,
Right.
I think it may have slightly been influenced by the Tezos Foundation Council number, perhaps. I think they might have had 5 members at one point in time. Maybe they still do. I'm not sure. But we weren't trying to do the Tezos Foundation. Basically, I was just thinking, okay, we need a starter governance model here. We really like the representative model that Tezos has. We don't have 430 people as validators to join right away to be the voters on this. So let's start with something that has a degree of decentralization associated with it, that can be shown to not just be one person making all the decisions, but could change over time. And so I think it's likely that how the council operates will change over time. I would not at all be surprised to see the council grow as interest in this project grows and as the number of Staker token holders grow. We've started talking about the fact that there's different expertise in different areas from our community. We have some folks who are really big into proof of stake. We have some folks who are really big into VC. We have some folks who are really big into NFT space. And we may want to actually start authorizing sub-councils to have the rights to make certain decisions in this. One of the cool ideas that has been bandied about is some kind of NFT basket of products, but we would love to, if something like that were to emerge someday, we would want to have a community of experts. We would have a council of experts who are making decisions on what kinds of NFTs should be in that basket. And that could be a set of responsibilities that could be ceded to them on chain, for example. So because this is, because this is a startup, because it is a corporation, because the token ownership is a security, we acknowledge that we are doing things more centralized, if you will, than kind of the pureness of, say, what Tezos has, for example. And it's just a journey that we're on. And so I think a lot of things will change in how governance works over time as the community itself organizes and finds better ways to do things.
And I think everyone can definitely appreciate your ability to listen to feedback of the community and make changes accordingly. And you did mention Christian, the product lead at Staker there, in your previous discussion. And we recently actually had him on for an AMA with Clove Wallet. And I was just wondering, I know this is not really probably an immediate concern, but do you have any wallet solutions in place for Staker, Blend, or any kind of partnerships in the works for future assets and how they'll be held in wallets?
Yeah, so one of the interesting elements of this project is that I think we launched the first FA1.x token on Tezos when it went live on January 1st. Maybe there were others on mainnet, I'm not really sure, but I feel like we kind of were one of the pioneers there. And so that meant there weren't any wallets that were actually showing any FA tokens yet. And so that was kind of a problem for us. And so Christian started reaching out to the different wallet providers in the Tezos ecosystem. The guys at AirGap were really interested in showing FA tokens and into that space. The guys at Galleon, the cryptonomic team, were really interested in it as well. And so they kicked off a visualization project for tokens. As it stands right now, the Galleon wallet is the only wallet that I'm aware of right now that will show a staker token in its wallet. And I think AirGap may be showing the TZBTC tokens in their wallet, but not ours yet, which is fine. We have such a small holder base right now. This is like a huge effort for the Galleon team or the AirGap team to do for very little return for them, essentially, other than being an early wallet, that are showing growth of Tezos. This is all very early here. I think, however, as they lay these rails down, they're going to see a number of new tokens emerging, which will be valuable for them, including our blend token, which will be on Tezos soon as well. Having done that, now we are finally at a point where we can actually distribute staker tokens to our staker token holders. Christian just announced on the chat channel on Telegram yesterday, I think it was, that he's now starting to work with all the staker token holders to get their public TZ addresses so that we can send them their staker tokens. Now, again, the funny part about all this is that this is not a liquid token. This is not something that they can do anything with. They can't trade it because it's a security, right? And so there's this really kind of strange viewpoint of, okay, well, if I can't do anything with it, why do I need it in my wallet? And so, but people want it in their wallet so they can, see their portfolio, which is awesome. So we're in a position where now people who hold staker tokens are going to be able to hold them in their Galleon wallet, but they can't move them out of their Galleon wallet without coordination with StakerDAO. And that's because we, at this point in time, have to know everyone who holds our tokens. Doesn't mean they can't sell it. If they want to sell it to somebody, we're happy to support that. We just have to run that new person through our KYC process to make sure they're eligible to hold. And then we can help them make that transfer. So that's an early example. I think that the Clove wallet is going to be a cool partner in Tezos. They have some really innovative ideas for how to increase awareness of tokens and token distribution models. Very cool. I think there are, I'm really interested in some of the new platforms on Tezos. Like, we really want to see Dexter in action, for example. We think that's going to be really useful, especially for the blend token when it comes to Tezos. And we'd love to, be early customers or beta users, early beta token providers to any tool set that's being built on Tezos that gives users the opportunity to do stuff with tokens. So, yeah.
Yeah, and just a final few questions here before William wraps this up for us. So this is more theoretical. I know you're very well connected with Silicon Valley and with VCs. I wonder if you have any insights as to how far off we are from seeing exchanges like NASDAQ, NYSE start tokenizing existing securities. This would be, lead to groundbreaking efficiencies with settlement. I've gone into this in many talks in the past where we're living in an archaic system. We're in 2020 now. We should have instant settlement, and there's so much collateral requirement that goes with that. And the ultimate solution is having a security token. Do you have any insights maybe on how far off we are?
I don't know. I have no idea when when the large public monolithic exchanges are going to get around to. They'll probably do it when there's a lot in it for them. When they can make more money doing that than they can make running things as they are, which probably is going to be a long time from now. I think much more interesting to me is the world of the DAO and how we have an opportunity now between blockchain and DAOs to really decentralize the management of everything and recreate things like the NASDAQ, but in a more decentralized way. You know, it's going to be, we're on a 30-year journey here, I think, but I think eventually everything's going to become tokenized and everything is going to become managed through decentralized models like DAOs. I was talking on a panel yesterday for the blockchain gaming Alliance. And these are people who are building games on blockchain, and they're thirsty to learn about how can they DAOify some of the stuff they're doing. You know, all these virtual worlds, like unfortunately we don't have any on Tezos yet, but on Ethereum you have like crypto voxels and Sandbox and Somnium Space. Those Decentraland, those projects, you know, are ready made to have DAO models associated with them. Basically recreating the centralized world of the 20th century in a more fair way in the 21st century, I think, through blockchain and DAOs. I don't know if NASDAQ will get around to it, but I think 50 years from now, there won't be any companies on the NASDAQ, except for maybe Amazon. Everything is going to be pushed towards decentralization.
Yeah, a very interesting take there. And William, did you have any closing questions?
Yeah, so actually I had one last question I wanted to ask real quick. Jonas, how do you see the DeFi space evolving, and more specifically, how do you kind of see that evolving within Tezos? What is your long-term kind of vision, I guess, on DeFi as a whole?
You know, for us Tezos fanboys, I'm concerned that we don't have enough action going on Tezos in the DeFi space yet. I feel like that is the near-term winning play for Ethereum right now, stable coins and DeFi. I think the ICO boom is long done, but it's being replaced by the DeFi boom and the stablecoin boom. And it will drive a lot of value into Ethereum because people are going to want to participate in those ecosystems more and more. And Tezos needs to get its game together to make sure that it is bringing interesting DeFi projects to Tezos, which is clearly a superior platform, right? But we need to have the use cases on top of that platform that make people want to come to this chain. So you know, I really, like I said, getting a decentralized exchange going, getting some lending protocols going. Hopefully the Checker project that Arthur is working on is something that will materialize sooner than later, so that we have a decentralized stablecoin, which would be great. Kevin's working on getting the USD TZ token running. I think that's an important part of our ecosystem, to have one or more centralized stable coins running also. And for our part, we're going to be bringing the Blend token to Tezos this summer, so that it's not, you know, we kind of think of Blend as a stable coin pegged to the value of proof of stake, if you will, rather than pegged to the value of a fiat dollar. So we hope that it will become something that could also become a primitive in other DeFi projects as well.
Yeah, absolutely. I think there's also been some developments. You mentioned exchanges. there's been some developments recently around elevated returns and alpha points. They're real estate security token exchange. So it'd be interesting to see how that turns out.
One of the call to actions I have for the community here is, let's get some NFT projects going too. I know we all are talking about Ghost, what Kathleen is working on.
Right.
The problem with for her is that all of the exchanges and all of the NFT markets are all happening over on Ethereum right now, and all of the buyers are over there too, right? We have to jumpstart that, and I would love to see somebody bringing a NFT marketplace on Tezos. I think that's a quick win for somebody to get a NFT marketplace running. I don't think it's a huge technological challenge. I think the FA2 token standard that is being finalized by TQ is a great place to produce NFTs on, hopefully. And I think we could really create, jumpstart that space effectively if we had that going. And then that lets you bring kind of virtual worlds and world building type of stuff into Tezos as well. And that's all going to be really important for the longer term vision of growth.
Yeah, I'm definitely personally looking forward to see how emergence turns out. But Jonas, is there anything else that you would like to add before we start to wrap things up?
I would love to encourage folks who are interested in following us to join our Telegram channel, which I think is just Staker Community. And that's probably the best place to keep up with the team and have real-time discussions about what we're doing. I would encourage anyone who really wants to influence the direction of StakerDAO and its future projects to join our forum at forum.stakerdao.com. That's kind of the long form place to share your thoughts and have, very reasoned discussion without all of the, when blend token questions that you get over on the Telegram channel. So those are two places we'd love for you to come hang out.
Great. Ken, did you have anything that you'd like to add before we wrap up?
I think just reiterating Jonas's suggestion there for an NFT marketplace. I want to just echo that. Anyone listening here, easy win. Maybe even introduce it through the Staker platform, right? That's a possibility.
Possibly, but it probably is not necessary. I really think there's a really cool opportunity there to get things started on Tezos in the NFT space.
All right, guys. Thanks for taking the time to chat today. Hope you all have a good rest of the day.
Awesome. Well, thanks for having me, guys.
All right. Thanks so much for joining. Take care, everyone.
See you.